Ho ho boy, we got some red today, guys. We have a lot to go over. We're going to break down the Federal Reserve, what happened there, the indexes here, 5 companies, all of which just reported earnings, jam-packed video. Hit that like button, make sure to subscribe, and of course, don't forget to follow me on X and TikTok at Stocks Talk Stocks. And with that being said, guys, cheers. Let's dive right into it because, again, we have a lot to go over in this video. So first and foremost, we have all the indexes. They closed in the red. They did not do well today at all. The Russell went down 2.4%. The NASDAQ went down 2%. S&P went down 1.6%. And we had the Dow go down the least, but it still went down 0.8% as the VIX is now back in the mid-10s. It's at 1430. It went up 8% roughly on the day as the metals, looks like here gold went up 0.3, silver went down about 0.8, so those were kind of all over the place. But yeah, man, volatile day and a lot of red, which mostly came at about 2 p.m. here as we had Powell doing what Powell does, right? And we got, a bunch of things from the Fed that we're going to talk about. And since that point, we had SPY hit about 489, and then it got down to 482. My goodness. So we saw a big drop of around 1.3% from top to bottom today, pretty much. And triple Q here, that's got to be, it's got to be a bigger drop, right? Went from, let's see, 423 to about 416.50. That was a 1.5% drop. So yeah, let's break down what's going on here with the Federal Reserve. And to do that, to give you guys a visual as well, let's just go to this CNBC page right here, which really does a great job of showing the timeline of kind of what's going on here. And this will give us, again, a visual really for you guys so you can see what's going on. So we can see the Fed needs to see, quote, more evidence that falling inflation is sustainable, according to Powell, while the 6 months of declines in inflation have been a good story, quote unquote. Fed Chairman Jerome Powell, said he is looking for more broad-based evidence that prices are falling. So he doesn't want to prematurely cut, in other words, reading between the lines there, right? And when evaluating the inflation numbers, much of it is stemming from goods inflation, meaning the services sector would have to contribute more as inflation flattens out. In other words, what we care about is the aggregate number, not so much the composition, but we just need to see more. That's where we are. And as a committee, we need to see more evidence that confirms what we think we're seeing and gives us confidence that we're on a sustainable path to 2% inflation. So in other words, guys, reading between the lines again, he might not be so confident about, inflation. Yes, it's down a lot, but could it see another resurgence? He might not be as confident as he should be right now, even though we're at 3%, whatever it is, inflation. Either way, he's not confident enough to cut rates now, even though we're already kind of expecting them to be in the back half of this year. But either way, let's continue. Let's come up a little bit more here. And he said Fed may need more signs of easing inflation before it cuts rates, according to Powell. The central bank may need more signs that inflation is easing before it begins, quote, dialing back the restrictive level and cutting rates, according to Jerome Powell. And he said, quote, the median participant wrote down 3 rate cuts this year, which we all knew, we anticipated. But I think to get to that place where we feel comfortable starting the process, we need some confirmation that inflation is in fact coming down sustainably to 2%, which, think about it. We're down from like 10% to 3%, 3.2, whatever it is. How is that not confirmation that inflation's coming down? So he clearly thinks, the Fed thinks potentially we could get a spike, which, another spike in inflation, which I honestly would rather them not cut rates prematurely, right? I don't mind them pushing the rate cuts back. But the stock market is, maybe selling off a little bit due to the sentiment here a little bit. Either way, what do you guys think? But yeah, I rather them not cut rates prematurely because then we might get another run in inflation for all we know, which is what they're trying to avoid. they're trying to avoid that, right? So let's come up here a little bit more. FOMC isn't at that stage to begin cutting rates, said Powell. We talked about that a bit. He said, quote, "We're not really at that stage. There was no proposal to cut rates. We weren't actively considering moving the federal funds rate down, at least as of now." Powell said here, guys, there's a, quote, "ways to go before saying soft landing has been achieved." Fed Chair Powell isn't ready to declare a soft landing. The jargon describes a scenario where the economy is cooled without being tipped into a recession. Quote, "Certainly, I'm encouraged, and we're encouraged by the progress," Powell said. But, quote, "we're not declaring victory at all at this point. We think we have a ways to go." So it might not be all sunshine and rainbows and freaking butterflies and, just happiness like everybody's pricing in the stock market right now. It might be rockier than expected, in other words, is what Powell's saying. And yeah, that's probably contributing to the loss on top of what we saw from, Google and Microsoft. A lot of the bigger tech names moved down. So that on top of the Fed pretty much caused a massive red day today, guys. But let's see, anything else? I mean, that was really what I wanted to cover here, guys. There is a lot more we could cover. Let's see here. But I do want to break down some stocks and earnings. Let's see. We don't have a growth mandate, Powell says. Fed is looking for signs inflation is on a sustainable path down. Yeah, we talked about that. Yeah, all right. That's good for now, guys, when it comes to the Federal Reserve. That pretty much summed everything up there. Let me come over here now and break down these stocks. I don't want to have this video go too long. But yeah, let's talk about some of these companies that reported. You guys know yesterday we had Google, AMD, Microsoft. Tomorrow, Thursday, we have Apple, we have Amazon, we have Meta. So today we didn't have any crazy, I guess you can say, big tech names, but we did have a lot of other companies. We had Boeing report earnings. BA is the ticker, which you guys know. Boeing has had a very rocky last couple of months, weeks, and last couple of years. This company has not been doing well at all. Look at the 3-year chart, for Pete's sake, guys. What a disaster. The max chart is looking very wonky as well. So I wouldn't personally invest in Boeing right now. I talked about a couple of reasons why in my live stream on TikTok earlier at Stocks Talk Stocks, by the way, on TikTok. I'm going live there almost every day. I miss some days here and there, but mostly every day we're doing lives there. So make sure you guys go follow me. And yeah, I mean, look, Boeing, there's a lot going on here, a lot of problems. And it's just one of those stocks that is a pure headache, in my opinion. It looks like here adjusted EPS did beat negative 47 cents versus negative 78 cents expected. Looks like sales $22.02 billion versus $21.1 billion. That beat as well. So nice double beat. Let's see, anything else here, guys? Boeing backlog includes more than 56,000 or 5,600, commercial airplanes. Looks like they delivered 157 commercial airplanes in Q4, 611 net orders here. Boeing's 787 production rate at 5 month. Let's see, 737 production rate at 38 a month. So it's 5 a month production rate. That's for the 787. Again, 737, that's 38 a month. So it looks like Boeing did double beat. Their stock went up 5% today. And I mean, look, we do have a descending triangle here, which is a bit, alarming if you're looking to maybe trade this thing. I mean, we do have that. Let me show you this right here. But we are at the same time breaking out of the 50 SMA, which is pretty good. So we'll see, man. Maybe we do get a bit of a rally on Boeing. I wouldn't invest in it again, like I said, but trading it, I'd consider it. Maybe. We'll see. As now we are building above the 50 SMA, which we haven't been above in a couple of weeks, about a month actually. So keep your eyes on Boeing. MA is another one. MasterCard, which went up 1% today roughly and is trading very, let's just say frothy. Is trading a bit at an overbought level, at least in my opinion. I don't know. But MasterCard today, they reported, let me see what they ended up doing. Looks like adjusted EPS of $3.18 versus $3.08 expected. That beat EPS did. Looks like they beat on sales as well, 6.5 billion versus let's see, 6.48 expected. That's good. So they beat EPS and revenue. Not seeing anything else here, but it looks like, oh wait, Wedbush raises MasterCard's price target to $500 from $410 after better than expected Q4 results, and they keep their outperform rating, which is pretty good for MasterCard here. Again, the stock's now at $4.49. It went up 1% on the day. So keep your eyes on this. I wouldn't FOMO into it per se, but if it pulled back, maybe as a continuation play, I'd watch it. So MasterCard, keep your eyes on it. QCOM, also known as Qualcomm, QCOM's the ticker. This one reported earnings, and we're actually looking pretty good on the charts here. We're right by the 180 SMA. Looks like uptrend is continuing here. We're up a little bit. Are actually down a little bit as the earnings came out about a half hour ago after the bell here. So let's see. They ended up reporting 275 adjusted EPS, which beat the 237 expected. Looks like revenue, where's that at? 9.92 billion versus 9.51. So that beat. So EPS and revenue beat. They see Q2 adjusted EPS of 220 to 240 versus 225. That's good. On revenues of 8.9 to 9.7 billion versus 9.93 billion. So good guidance on revenue as well. And the stock's down a bit, about $2-3 after it actually shot up about $7 initially to 155. So keep your eyes on QCOM here, guys, as I actually really like it. On this dip here, we're down about $10, now 13 from the recent high on pretty good earnings, solid guidance. So let's see if we get some sort of bounce off that 180 SMA. That's what I'm watching out for, at least here on QCOM. And before we continue on here, guys, if you have not gotten your free stocks yet for Moomoo, what are you waiting for, man? Use that link down below or go to StockSurfest.com/Moomoo. You see it right up here. Use that link, open up your account, and fund it with at least $100. You get 5 stocks, and fund it with at least $1,000. You get 10 more stocks, and each of those 15 stocks could be valued up to $2,000. And there's a lot of other perks by using that link down below. So make sure you guys do that. And of course, that is an affiliate link. It helps out the channel. I appreciate you all as always. And with that being said, guys, cheers. Let's talk about the last 2 stocks here, which are PSX and ALGN. So PSX is Phillips 66, which, my goodness, man, this thing is at a fresh high here, a multi-month high on the 4-hour chart. You guys can see. So this is another one that I'm like, oh, I'm not FOMOing into that. But let's see what they reported. This thing was running into earnings, and even after earnings, it keeps on running. So that's a great sign. Yeah, they crushed it, man. Adjusted EPS of 309, which beat 234 expected. Sales 38.74 billion versus 36.5 billion. So they beat EPS and revenue there, which is fantastic. And like I said, with Qualcomm, this one's even more overbought. Was that Qualcomm or MasterCard? No, excuse me, MasterCard. It's pretty overbought, right? Both of these. So I'm not FOMOing into it, but if we do get some sort of pullback, Phillips 66, I'd consider it. And I'm already long an energy ETF, which is another topic for another video. But XLE is that energy ETF, and I've been buying this thing over the past couple of weeks on the weakness here that we can see, which who knows, might continue, might not. Either way, I'm long XLE. And the last stock for the video, guys, is Align, which went up about 1% on the day. And look at this big move here after the bell right now, guys. The company just reported earnings, and it's up big time. It shot up initially 20%. Now it's up about 10-11%. So they reported adjusted EPS of 242, which crushed the 218 expected. And it looks like here sales $956 million versus $933 million. Estimated. So they crushed EPS, crushed revenue. Q1 24 revenue, they see 960 to 980 versus 946 million expected. So that's well above the analysts' expectations there. And full year revenue, they see up mid-single digits over 2023, which is solid. Capital expenditures about $100 million. So yeah, very strong guidance there, guys. And when a company gets guidance like that, strong guidance, A lot of the time, the stock does see moves like this, and this thing was beaten down. It got down to 176. The high recently was 413, and now we're pushing 300 again. We're taking out the highs from the last couple of weeks. So let's see. Let's see if this momentum continues here on ALGN. Kind of another one that I wouldn't necessarily FOMO into, but for sure keeping my eyes on it here as, again, we're seeing a breakout post-earnings. So what do you guys think? Let me know your thoughts in the comments down below. Hit that like button. Make sure to subscribe here on YouTube. Follow me on X and TikTok at Stas Talk Stocks. We're going live there every day, so make sure you guys follow, and I'll catch you all in the next video.